Welcome to the Trading Bell. Stanbic Bank have released their full year results 2023. Impressive 34% profit after tax. I'm here to speak to Joshua Oigara, the Chief Executive Stanbic Bank Kenya and South Sudan, to unpack the numbers and more. Joshua Oigara, welcome to the show.
Thank you very much.
It's been some time since we had you here, but welcome back.
Yeah, and, welcome to Stanbic home.
Absolutely, yeah. Absolutely. And first of all, congratulations on your numbers. That was quite impressive. And of course, being the first ones to release the numbers, we really appreciate that. And I'm sure your shareholders as well are very happy, and you'll be telling us more about what you did to them. But before then, looking at the remarkable numbers that you have released, I wanted to pick out your mind on what are some of the key drivers that led to this, and how do you feel about it?
I mean, I would say maybe three main aspects.
Yes.
So it's been an environment with difficulties generally for a lot of our clients. And your typical macro environment, your cost of operations.
Yeah.
But this is not something new. But last year was much more difficult.
Okay.
So we've seen our customers, do more activity, which for me is how you look at activities within the market.
Yeah.
We've also supported them with a regime of high interest rate, so to be able to provide more extended funding for them in this period.
Yeah.
We've seen more trade in this period,
Yeah.
so customers within just local markets and regional markets. We've also seen expansion of our total assets, so our loan book was up 18%.
Yeah.
Our total assets were up 15%.
Yeah.
So that gives you some kind of huge impressions about the rigor and organic size of our business. But I also must say that we have other businesses which have done extremely well. So our largest business segment, which is corporate and investment banking, is a very strong rider in terms of its own revenues, right? And then we had some nuance on our bank assurance business. Our business grew very strongly last year by more than 93%.
Okay.
Yeah. So new client activity. What you like to see progress in an enterprise is how you're supporting clients, how is activity moving. When those collaborate or when they converge, that demonstrates our performance. We also had a significant transaction last year, advisory, if you remember, on a capital market transaction.
Absolutely.
And that was also a big uplift in our performance.
Excellent. And I listened to you yesterday at the release, and you spoke about this being the close of your strategic focus for the years that you had, and now there's a new phase coming up. And I know your shareholders, your stakeholders would be curious to know just a little bit of, bird's eye view, or a sneak peek maybe of what to expect in the next focus.
Correct.
And of course, hoping the numbers will still be good. Could you shed some light on that?
It's been a strong period for us. So first, let me say that it's been good for shareholders' returns last year. So our dividends were up 22%, and to shy of just 6 billion shillings. Wow. And so that's quite significant. It's a record dividend for us as Stanbic. But I also say that our ambition is to be within your 50-60% dividend payout on an annual basis. So that's kind of a commitment. That's the corridor we operate.
Wow.
In terms of going forward, financial services and banking largely remains very much enabler and catalyst for growth across many sectors.
Yeah.
And you can look at, there's no single sector which was not growing last year. Economy is rebounding at 5.6, 5.7% this year, hopefully when the numbers are announced. And when you put our lens on what is the next horizon, so three main aspects I would say: strengthen our business, core business. Yeah. So what are we strong at? Our private banking, our affluent client propositions. Yeah. How do we grow strongly our large corporates and investment banking clients? How do we work on our commercial and SME businesses, and then build our insurance businesses together? That is a cornerstone of our business. That is 60-70% of our growth momentum, and we'll continue to do. But also we bring in new nuances on technology. Okay. How do you build partnerships with elements like fintechs and invest in our own technology platforms this year? Okay. So that gives you ability to improve efficiency. So three things that shareholders will see in the next few years, 3 years horizon, is strong headline earnings. We propose that revenue will be up between 14, 15, 16%. Wow. We believe that our cost to income ratio efficiency will improve by another 200 basis points to around 41 to 42%. And we'll continue to see our return on equities grow strongly to the range of 23 to 25% in the next 3 years.
Which is very good news for the shareholders then.
Absolutely, absolutely.
In fact, somebody said that you are on record as being touted as the people who are never afraid on giving generous dividends to the people.
No, not let me say that when you look about the role of an enterprise, and this is philosophically a very strong construct for business.
Yes.
You build a legal entity to bring in capital and resources to deliver services and definitely return a payment back to shareholders.
You're right.
And that's a very strong model on how we raise resources. Now, our view has always been that, it's a triple play.
Okay.
You're going to be able to make sure you serve our clients very strongly, and there we get a revenue profile. We also then return part of that profit, to your national, ecosystem play, which is your tax registration authorities.
Yeah.
And then finally, you actually play to the shareholder game. So that's, I call it a trinity of sorts.
Yeah.
That is the balance we want to do as a business in the short, medium, and long term.
Okay. Let's talk about the market challenges that are, facing your entire sector. And I think it looks like you will never get out of challenges coming up. I mean, talking from the COVID era, everything coming up, what we're seeing in geopolitical matters that are happening. And I don't know what is in entry now, what you're fighting now. And I wanted to know, amidst all such great results that you gave out, how did you navigate this? And what are you foreseeing as the next headwind that is coming up?
I mean, our view, when you talk about, when you look over a long period of horizon, you're talking about 20, 30 years, actually nothing really is stable.
Nothing, that's true.
It's a mirage, right? We all assume that, the rate of change, maybe what you look at is our rate of change is less than what we see. But change happens every day.
You're right.
So the view from enterprise for stability, I mean, we're in an environment that is extremely volatile. It's very uncertain. It's very complex.
Yeah.
And in a way, unambiguous, actually. So the model about is how do we navigate in boards and management that kind of catalyze that opportunity, are the ones that will see growth. So the view about stability is not something that I can say we can put in our strategy. It's a mirage which, if you play that role, you will demise actually as an enterprise. So our view is, how do we see, so our risk models, the universe of model of risk we take, we extend credit, we take some market risk. How do we look at our capital and financial capabilities, deal with liquidity? And I would say in short, the crisis we're dealing now is your global geopolitical shocks. Tightening of macros within the advanced economies. That's the big issue for us in Kenya. And we have seen our own, high interest rate regime. This is perhaps one of the highest rates we've seen.
You're right.
Maybe in a decade. This must have been 2020, 2011, 2012, 2013.
Back in the days.
Absolutely.
Yes.
And it pushes, the energy and the oomph from clients. But we believe that they are right measures. And therefore, when they ease off, so our role is to midwife that kind of economic cycle. And we worry around concerns around, for instance, re-engineering in cybersecurity. That's a massive risk we face today. It will continue to be. You see a lot of social engineering as a massive area. And also lastly, banks must be well capitalized to be able to withstand the kind of risk profile we see today. And I'm privileged that I run at institutions whose capital structure is strong.
I just want to dive deeper into that because listening to you, you had a different perspective on looking at some of the policies that we have here from what the central bank is doing and everything else. And you sort of were rallying Kenyans to also try, dig deeper and understand what, for example, governments of the day are trying to do. And you have the privilege of having a bird's eye view of the region, standing here at Stanbic. And I wanted you to sort of help us understand. Because sometimes we are quite reactionary. We are like, what has happened and everything else. Could you put some color into this so that at least we can understand better?
So for us, let me just step back and say, we have a lot of opinions about how to construct running sovereigns or republics. If I use that term.
That's true.
They're very complex.
And Kenyans are especially.
And actually, if we take about history, if you think about how many people as a percentage of a general populace can be able to lead sovereigns, you can't even get a 0.001%.
You're right.
But we are good in providing ideas. So, we can complain about problems, but rarely do we find solutions. So one thing I'm privileged to see, and I'm gracious enough, is to appreciate the complexity of transitioning sovereigns from one point of strength to another.
Which is good.
It's perhaps one of the most complex jobs you can ever do in your lifetime. And we're a 55 million population country, so it's not going to be, so you have 55 million thoughts about what to do. But let me just try and come in and say, what do we see? So within the cluster for the region, I call it the Northern Corridor, this is really the philosophy we have. Huge market potential for us. It's close to 500 million people, including Ethiopia and the DRC. The economy is $521 billion US today. And he's projected to reach $1 billion. I mean, that's massive. It will put us into top 10 economies in the world as a bloc. So do we take opportunities for trade? Do we invest in manufacturing to support our clients? How do we deal with housing, agriculture? How do we deal with healthcare, transportation, logistics? There are so many opportunities. And I think you can see an opportunity too. You can see it as a problem and say, okay, someone do something, or you can take advantage of the gap and provide a service. That intersection of the two is what I see our smaller customers, our SMEs, our enterprise clients every day rising to do. And if there's one, I will give one lens about that possibility is around taking the courage, taking the energy and the belief, being intentional to supply a service or some goods within the marketplace we have. By the way, the fastest growing part of the continent is right here.
It's right here.
Right. So we don't see it. And what we do as Standard Bank and Stanbic is to connect, we are the country that can connect largely many parts of the continent. So this is a moment, historic moment of opportunity.
You're right.
Logistics-wise, financial-wise, technology-wise, capability in terms of education. So my plea is to say, if we provide solutions on one side, there are two sides of the same coin. I think we are supposed to take opportunities. Otherwise, other people, whether they are in Far East,
they will come.
I always joke and I say, we still don't make our own handkerchiefs. I see toothpicks, which are coming through long seas. You have all these Supramaxes coming to the port, and part of the container they have there is toothpicks. I mean, come on. Our construct as an East African population, and Kenyans in particular, is to poise to take opportunity. And that's where Stanbic comes in to support clients and customers.
Wow. Thank you so much for that perspective. Let me get a bit more into some of the things that have been happening locally.
Correct.
Our central bank really has been on the sector's agenda at some point now.
Correct.
We had the risk-based pricing coming up and, interest rate corridors as well being checked in. And I just wanted to understand from your customer's perspective, I'm sure you're getting the sentiments from them and the businesses that you support. How are they navigating this, and what are you doing to ensure that at least they're not left out even as we move in towards this? How are they navigating this, and what are you doing to ensure that at least they're not left out even as we move in towards this?
I will agree with you that it's been difficult environment for our clients. And we do, partner with all our clients, whether they're individual customers, your personal and private banking customers today, or our small and medium enterprises, even the larger clients, which we call the corporate and investment banking clients. Our view has always been that it's a wave. Tightening the profile of how we manage to respond to the challenges is how we will succeed, actually. And it's kind of a play we've seen before, right? But we all want stability. But I think what you need to push for is resilience. That as you ride the waves, you are able to remain solid and dance with the tunes of the moment. That's what we see. So we work with our clients. I would say like about 30% of our clients who sought support from the bank, we've been able to provide. I'm privileged to say we've been able to provide solutions for them. Now, how do we see that resolved? We believe that even as the regulators, and not just in Kenya, but even globally, adjust their monetary policies or their tightening stance to address, what's the biggest challenge actually is your inflation.
That's true.
And all of us don't always spend time dealing with this giant
called inflation.
If you think about it from advanced economies, and if I spend just a minute, inflation advanced economies used to be circa 1-2%. You saw it at 10%.
That's low. That was huge.
The risk is to inflation to become from cyclical to become structural. You get me? So every single day is ingrained in your blood system. You can't get it out. And that's a new nuance of high, CPIs, the prices that you see index. So I would say that we are supportive to clients. I believe that stance will ease. We are optimistic that as advanced economies ease their stance, generally to transcend into emerging markets and frontier markets like us. So I believe the worst, in our view, is generally behind us.
What about the concern that could be there of aging out some of the retailers? One person said, I'm worried that even as these rates come by, we might not be able to afford credit to just do these things. What would be your sentiment on that?
There is some truth in that nuance from clients. I mean, although in the industry I've been here long enough to see that rates in the past have actually pivoted beyond 25, 26%. I mean, that perhaps was in 2011. We've seen those rates.
That was huge.
Yeah, and I believe that because of the short-term nature of that lens, it's always like that. I mean, I always say it's like running. If I use a metaphor, it's like running a marathon.
Yeah.
You can't always sprint in a marathon and hope to win it.
That's true.
Right?
Yeah.
You must pace it consistently in particular buckets.
Yeah.
But there's a moment of sprint on the finish, and that's what wins you the medal. So that's kind of philosophy for clients who see it.
Very true.
And I do hope that what answer do we provide as Stanbic for clients in this situation? I like to answer that question.
Yes.
Is remodeling their structures for their, how do they pay? Correct. For instance, if I tell you a client who has, let's say, I have a facility I'm paying 50,000, now I can afford, I don't have the 50 anymore.
Yeah.
I have 47. How do you navigate? So maybe it's an extended period they need to have.
Okay.
And in there is really our relationship management as a bank comes in first place. When we say first private bank, we mean intuitively we know our clients' needs, we're able to speak to them personally and find solutions. Now, it also cannot be a painting it as a one brush and say everything is white. That's where the challenge arises. Every client's uniques are different. So they need to speak to their own relationship managers, to their own bank, digitally, and say, this is my need. And there we find solutions.
Wow. Maybe on the same, as we close on that, the NPL's outlook.
Correct.
Because that could also be a concern for people who have already taken loans with you and all that. How do you see it coming? And I love the fact that you're saying, yes, you're having conversations with them, but how do you see it coming out?
So this has been a massive question, I would say. But let me just say what we see in terms of the posture.
Yeah.
Generally, we've had some of the highest level of NPLs. But I look at it from what I call as the cost of risk or your credit loss ratios. And that's a better lens to say, over the loans I'm taking today, how many are falling into arrears? So we look at some kind of small tools like your vintage model.
Yes.
What's your 18 months loans looking like, or 12 months? And I would say it's looking actually positive.
Okay.
I'm not worried personally. Our cost of risk or loss ratios now are around 2.35%. They have increased up, and we are concerned, but we're not worried.
Yeah.
Our belief is that clients are able to adjust through engaging their institutions, especially for personal clients. For the smaller businesses, we call them SME or enterprise clients, we've seen a lot of pressure there. And I will agree that is where perhaps the rubber hits the road. That is what is the hot spot at the moment. Yeah, because sometimes their revenues are fixed and the costs are increasing, not just interest.
Yeah.
Your energy costs have gone up, your fuel cost has gone up, and maybe even your overall taxation has increased.
Okay.
Yeah, that's what I would say in terms of the support. So I wouldn't say, do we see it coming down? In cyclical nature of your typical microeconomics, finally cycles do wind down.
Okay.
Yeah, and I'll use a metaphor I said yesterday that many people cannot remember where they put their last mask.
That's true.
From COVID-19.
That's true.
Yeah.
Things change. Maybe the last question on the numbers. Cash flows and operational performance. I noticed something as I just looking through your books.
Correct.
And the summary of the consolidated cash showed a significant jump. I noticed this was from about 11 billion to 35 billion. That is in 2023. And I wanted to know, what are these factors that impressed this particular operational growth that you noticed?
So, we're very pragmatic on how we definitely invest our liquidity and cash within the institution. So not major projects last year. This year we have significant projects which are coming on, largely on technology and some kind of just ring-fencing investments just to support our clients today. So we kind of optimize our own profile of assets. If you look at our earning assets in the balance sheet, I'm happy to say that we are almost at the 80 percentile. So between 80 to 82% of our assets are actually earning. So it's rebalancing those in a short, because especially on higher interest rates, what tends to happen is that your mark-to-market positioning results in short-term losses. That's really what tends to happen. So optimizing that kind of your portfolio is what will give you a better outcome for much more advanced bankers. And I must say that there are very few institutions. I'm proud to say that as part of Standard Bank Group, that capability is well entrenched and discovered. And that is one of the strengths we deliver to market. So I'm happy to say that that rebalancing was largely taking opportunity of the market. But as things settle, we're able to redesign that kind of profile. And that's what really risk management at its best does for an institution.
Wow. Okay. By the way, you've spoken about assets, and I just remembered yesterday, one of the things that I was wondering, when I looked at your financial assets, most people in the industry looking at the good interest rates being offered, for example, in government papers and all that, you would tend to think this is a direction you would go. But I noticed you have had sort of like, not a slowdown, but you are not as excited as others. What's informing this?
I mean, can I call it like it's an adverse direction?
Okay.
If you use that kind of word to say, you know, intrinsically what our intensity is as a bank, it's support client activity.
Okay.
I mean, and that's our philosophy. Remember that our real, why do we sit?
Yeah.
Why do we run? We say Kenya is home, we drive our growth.
Yeah.
It's that small business.
Yes.
You know, there's nothing as exciting if you look at it. That's what we say. You
That's
know,
true.
Kenya's home, right?
Kenya is our
place.
home.
The first school, right, where, you know, a kindergarten school where, you know, if my mom in the village has a school, the first source of credit could either be her own chama and the bank. Correct?
Yeah.
Delivering the first, you know, a bus.
Very true.
Or even if it's a tuk-tuk, taking kids somewhere. That's what credit does from financial institutions. You don't get enough. People don't see that lens. And I like to say that if you actually double-click, if there's one thing we need to do in 2024, is try and double-click and get the information, learn something about it, how the model works. Otherwise, the conundrum is very generic. You know, it's just a painting a brush and saying, these guys just deliver big profit, they do nothing. If I go to a small hospital where we're doing vaccinations for children that are traveling, correct? Even the life-saving vaccinations, you find banks have actually invested in that business, in that entrepreneur. And that's how you build your livelihoods. That's how you build your less mortality. That's how you future-proof your economy. It's those populist issues that we forget. Now, as you think about the helicopter view, which is your macros and other issues, I think we must think about the ground issues. And that's really what our philosophy as a bank is about, driving our growth. So as long as we put money in there and we build Kenya, I think that is really what our ambition and purpose is.
Wow. We have to come to a close of this, but I can't end it without talking about the recent time I saw you on the sustainability report launch. You did that. And I just wanted you to highlight what are some of the things for those of you, for those of the viewers who may not really get to know what Stanbic stands are, or any highlights you could point out.
And first, I must commend you what you actually do at the Trading Bell.
Thank you.
Because you're among the few that really articulate the ambition about future-proofing our continent.
Absolutely, thank you.
And also just speaking about sustainability. It's not an easy caricature to to put on the table.
You're right.
Correct? And you know, you wearing the badge of Sustainable Development Goals is a mark of really understanding. So first, keep it up.
Thank you.
So a few things, and I'll try and summarize it. So our belief as an institution is we must build sustainable long-term growth in our businesses. So we can have kind of shortcomings in the short term. So we have kind of 3-4 areas. Now I can summarize them to 4 priorities.
Go ahead.
So one of the greatest things we can actually do in our business, you're thinking about the market, is to support smaller businesses. So you call them SMEs, or some call them micro enterprises. They are also nano entrepreneurs, you know. The other day I was speaking to some students.
That's a new nano
entrepreneurs, you know. It's a student in uni trying to set up a business, right? It's probably 20, 30,000.
Selling cookies and other.
Absolutely. You know, that business can become a big business.
You're right.
If you focus on it, right? But where do they get support? Where do they get funding? Where do they get their invested capital from? So that's one area for us. We believe if that business, a student can hire 3 people. So let's take an assumption we have 1 million students who want to do businesses, and they hire 3 people. That's 3 million jobs. That is the same amount of jobs the Republic has created in the last 60 years.
Absolutely.
So that's building a model of sustainability, if you think about it that way. So we create, and we are very focused also on women entrepreneurs. So our data proposition and offer that you know very well, it supports women entrepreneurs. So that's one philosophy for us. So if you build enterprise, you also create jobs. That's a very, and also in the small scale level. The second item for us is we have to deal largely with the infrastructure and developing, you know, energy transition. So you've seen that a little bit, solar's work, you know, wind projects. That's important for us because we believe that energy must move away from your natural fossil fuels into renewables. And that's an issue that the bank is moving very closely. We believe on the continent will be the single largest catalyst for transitioning from fossil fuels to non-fossil fuels, including EVs, electronic, you know, motor vehicles and electronic drive vehicles, whether they're 2-wheelers or 3-wheelers. The third one, if I just try to say what then that looks like, is about how do we build an element relating to your climate resilience or climate finance. Because it's important that you see high temperatures and being a person who understands a lot about the SDGs, that remains a big gap. You know, drought. You know, you see the challenges in Australia. You see some fires happening in the Midwest.
Floods as well.
Absolutely.
Yeah.
And that affects a lot of our farmers. If we lack access to water, then we have challenges. So how do we build that model? And then finally, financial inclusion. Yeah. Every single part. Big time. So today we are not, then if you think about the next 5-10 years, we must provide a solution for the mass market, customers that have not banked. So that intersection between banking and technology, that's a sweet spot for financial inclusion. Absolutely. How do we reach 99%? How do we reach? Today we are at 79, 80%. So those, if you address those four, we are impacting the issues on the ground, fundamentally shifting the landscape for our own economy. Now, we also must extend it in the region. Yeah. Correct? And the benefit of Standard Bank, you can then connect across the network of the continent. Yeah. And that force, which I call it the force for good, if you combine it today with the growth engine we have as a business, I can assure you we can catalyze transformation in terms of sustainability for our institutions and our country.
Joshua Oigara, thank you so much for your time.
I appreciate it. Thank you. Good to see you, sir.
Wow. There you have it, Joshua Oigara, the Chief Executive, Stanbic Bank Kenya and South Sudan. Very optimistic and, of course, goodwill message as well to the shareholders that they have just started. Thank you so much for your time. I leave you now with the market.